Let's get some analysis with Mario Singh, co-founder and CEO at FX1 Academy. Thanks very much for being with us, Mario. First of all, let me quickly ask you about this big victory of Obama. The healthcare bill is through. Does it have any kind of significance how the US dollar may trade?
Hi, Patricia. Yes, I'm sure there will be some ramifications on the US dollar, at least short term. When the news is coming out, I do feel that it will be bullish for the US dollar. It was one of the biggest news that President Obama has seen. At least it's one of the biggest upheavals for him in the last 4 decades. So what I feel is going to be good is that while this is going to be great news, at least for the Democrats, I still feel that he hasn't fully gotten bipartisan support from the Republicans. So they're going to be making it a little bit pushy, shovey for him. But short term, I do see, in fact, it's reflected a little bit in the Forex markets. It is short term. It is going to be bullish because it is good news for the US dollar at this point of time.
Maria, I know you're very excited about the Swissy as well, but before we talk about the Swissy, let me quickly ask you also about the Indian rupee. Of course, we did see an increase there in the repo rates. What is the impact here?
Well, the RBI kind of took the markets a little bit by surprise, raising their rates. That was the first increase, at least in 2 years, on the back of news that their inflation rates was at a 16-month high. At this point, what's interesting to note in the FX markets was that the Japanese yen, the value of the Japanese yen actually increased over all 16 of their major counterparts in the Forex market. What this means to Forex traders is, at least at this point, while the Japanese yen is really looking like a proxy for the US dollar, it does see that all the high-risk assets like the Aussie, the Canadian, the Loonie, all of them will be dropping in terms of their yields. So we did see that all of the riskier assets like the Loonie, the Aussie and the Canadian all were dropping about 50 to 100 pips on the back of the RBI rate hike.
Well, I also want to get back to you on the U.S. dollar point, which is that I'm surprised that you're midterm bullish on the U.S. dollar, given that a lot of comments that we've seen suggest that they're mildly negative because of the U.S. fiscal debt position, especially in the wake of this passage of this bill.
Well, here's the interesting point, Chloe.
It's $1 trillion.
It is
over
$1 trillion.
10-year period.
Over 10 years, it will be $1 trillion. But here's the shorter news, is that over the Medicare deficit, it will help to at least lower about $138 billion over the next 10 years. So short term, that is going to be good news.
$138 billion. When you're looking at a pool of $1 trillion, the Republican argument is that it's actually more than $1 trillion.
Absolutely, which is why my comments were short term. I do feel it is going to be bullish, but long term, I still feel it's not going to be helping the conditions quite a bit at all.
All right, got that. Well, and why do you want to talk about the Canadian dollar so much? What's happening there?
Well, I still feel the Canadian dollar at this point is shaping up to be the crown jewel in risk FX all over the world. We are looking at the BOT, the Bank of Canada. It's saying things like, well, for inflation and economic output, it has far exceeded their expectations. We're looking at inflation rates 2.1% in February. All these are great news. And we're looking at the dollar Canadian. We are starting to see that traders and investors are pricing in for a possible rate hike in the interest rate for BOC.
Mario, we already kind of hinted at that you would like to talk about the Swissy. Of course, the Swiss economy being very well run, and they actually do have a trade surplus. They've got a fiscal surplus. They're looking in good shape. So what does that make the Swissy? A good buy?
Well, at this point, if I'm looking at the charts, the Swissy, the Euro Swiss in particular, is probably trading at about 143.50. Now, late last week, it came off. It just came within a whisker of the all-time lows of 1.4307. So at this point, while the SNB is kind of standing a stance and saying that, well, that Switzerland, they probably have got to get ready for a higher interest rate, I still feel that the SNB may just surprise the markets and come in with an intervention probably in the next couple of weeks.
And very quickly, we're out of time. The euro, what's going to happen? We've got the summit coming up. Where does it go?
Well, if I'm looking at the euro happening this week, there's going to be a tussle in between the euro camp. We see Angela Merkel. She's not really wanting to have the bailout in the cash bailout for Greece, but at this point, they're all having problems within themselves. I still see it heading lower, possibly to 134.50.
All right, we'll call you back. Thank you so much. Mario Singh, their co-founder and CEO at FX1 Academy.